we say the most exciting day is Monday. In this case, that's absolutely true. We're getting a massive gap out there, so I hope everyone's loving life. As always, the goal here is to talk about what you guys want to talk about, what symbols you're interested in, whether it's stocks or crypto or Forex or whatever it is. We'll go over them. We'll take a look at them from my point of view. So, my point of view is I am a quant primarily and also a CMT. So, where most people will combine some sort of, say fundamental analysis, they'll look at what the company does or what the story is out there or something like that, and they'll combine that with technical analysis. I look at uh, technical analysis and statistics, right? So, is there something out there that I can see that has some amount of recurrence and edge, something that I can prove, I can kind of point at with my math finger and say, look, every time this happens, there's a 60% chance or something that this other thing will occur, and we can get going and start to focus from that as well. So that's what we're talking about today. That's what we're going after. That's what we're trying to look for. So again, as always, make sure you're asking those questions and doing all that while I start to get everything geared up. So I'll do a little bit of a rant while I wait for questions to come in. We'll go over what I'm seeing here in the markets, why today is so much fun as somebody who bought a lot because my systems told me to yesterday, Friday. And there we go. That one right there. And then we'll go from there. So the SP 500, this is looking to be, don't want to jinx anything. Let's do kicker pattern candlestick charting. So there's a couple kind of ways to look at it. Some people are not big cat pattern traders, but in this case, I'm usually not a big pattern trader either. But this is an interesting one where it's pretty much, kicker pattern. So this is the technical patterns for those who look at these candlestick things, right? It's a bullish kicking pattern. The idea is that you have a bad day the prior day that closes at or near lows, and then the next day you kind of gap up and you rip from there. It doesn't necessarily have to be over that high, but you'd like it to be near that high and then rally. And if we can close anywhere near the highs, you can see how it looks exactly like this. Now, I'm one that I like to completely and utterly demystify these things the best that I can. So let's just think about a little bit what the psychology is behind this, because that's all we're trying to do with technical analysis. It's behavioral finance. It's behavioral psychologies. Now, what is it that we're seeing here? Well, you're seeing a lot of people selling or shorting into what was a high volume day on Friday. Right? Bad news came out. It was tariff this, tariff that, blah, blah. And we, I don't want to say crash. We're down like 2.5% from all time highs, but we sell off quite a bit yesterday. And then we get right near this area right here, and it's woe is me. It's the end of the world. Everything is bad. Sell and short everything. And then the next day, you gap up and you rip. So all of those people who sold their positions, they got, scared out or they dumped. Those people are wrong and they're underwater and they're having a bad time. So with that, you were looking to go with where people are hurt. It's kind of a little bit jerkish, I guess, to say, but that's one of our favorite trading setups is where is the pain? Where is the positioning? And we can look at the positioning over here. Oh, that's my website. Go to statsedtrading.com. I got some free courses there. No, not that one either. And then right there. Okay, here we go. So this is not the prettiest chart out here, so I'll walk you through. We're basically focused on this green line right here. This is the commitment of traders report. So when you set up a futures broker, they ask you a bunch of questions and then they bucket you into the small speculator or large speculator bucket, depending on whether or not you're big or small, right? And what's the size of your account. So this green line represents the net positioning of everybody who's participating in the futures market. What are they long? Are they short? Did they get longer? Did they get shorter? What happened throughout the week? This is a weekly chart, so every week this updates. And you can see they've been shorting the whole rip up. And again, I've been kind of ranting about this for months now and pounding the table that this is why I think there is this relentless bid in the market, because there's so many people who are caught short or underinvested, which in the financial space is the same thing. So they've been shorting this whole rip. And shout out, this blue line's the little guy. This blue line's us. It's the retail trader. We bought the dip, right? We started selling in through here. And then when the dip started to change, we bought the dip. So we did the good thing. And the hedge funds and the large institutions, they did the exact opposite and they've been shorting the entire time. And they just covered. You can probably barely even see it on your screen. Covered ever so slightly, essentially flat. They didn't do anything last week. So they were given a gift of a 3% pullback, and they were greedy and didn't take that off the table. So that's what I think is happening here. The fact that we're rallying, if we get back to these highs and these jokers are still short, it's like I was talking about tomorrow or before. If you know where the pain point is, they're no different from us. If they lose enough money, their broker comes a knocking, right? Melvin Capital went bankrupt. They they don't care if you are the largest hedge fund in the world or whatever. If you're short on margin, you can't you've got to cover, right? You have to, especially when the market's hitting new highs. So that's my theory on what's going on here. That's my theory right here is that you're having a bad time and if you're short. And I, for one, am all for it. As somebody who's long, I want them to continue to short into this rip as we continue to move higher. So that's what I think is happening here is that every dip, there are forced buyers. There are people who have to come in and buy. So until this line gets kind of back up to even, gets back up to zero, and that over that condition, the positioning is dealt with, they're screwed, right? They have to get out at some point. And you can't just stay short forever too, even if you've got a whole bunch of money, because not only are you losing money from an unrealized standpoint, so if you're a hedge fund, you're in competition with all the other hedge funds out there. If I'm a rich investor, why am I going to put it with hedge fund A if that guy's short when I can go over to hedge fund B who's making money? So that will cause some short covering. And then you have to pay interest on the short positions. So over time, you're just bleeding money realized, even though if you're holding this position unrealized. So eventually this has to work out. It always does. And when it does, that will probably be some sort of short-term top in the market. As you can see, if you follow this green line, look, they were the most long right here before Liberation Day and then got killed and then decided to flip short. Like, these guys are jokes. So going through the market, we have IWM gapping up and running. I think the first area of real interest here is going to be potentially this low right here. This is the SPY or the S&P 500. And this is the low before this gap down where all these tariffs took in place. Everyone got scared. We had a gap down. If we come back up here, that's filling the gap. A lot of people, I've never seen the data behind this, but a lot of people are of the understanding that if you fill the gap, that's it. That's kind of the target behind it. Qs, same thing. We're getting much closer to filling the gap. Even IWM, small caps, these guys like suck, right? These are the prior highs. Small caps couldn't get going for ages, and they're showing a big bounce today. So this shows that it's not just a big couple big cap tech names that are moving. It's nothing like that. Well, we're all traders. We can look at our portfolios. This is one of those days where if you own something that is down, you have to seriously ask why you still own it because everything's up. So why isn't my stock also up? That's what I'll be doing. This afternoon when I'm done here, I'm going to go into my portfolio and just take a look and say, if is there something that I own that's not up? Well, that's something that I should potentially take a look at and maybe want to kill, which could, I guess, be kind of a spoiler for what we're going to talk about. If you guys give me names that are getting hammered today, I'm probably going to say they're awful. But that's what's happening in the overall market. There's really nothing if I go like around the horn for different sectors. Everything is doing great. Right, XTL is telecom, that's up. We have WGMI, which is our Bitcoin miners. MSOS, that's also up. PSIL, which is psychedelics, that's up. So we have marijuana. We have psychedelics, and we have ARK up big. So if those guys are up, those are kind of really speculative type names. WGMI being Bitcoin miners. So everything in this top list is not oh, I'm buying defensive names because I'm worried about the market. These are just, let me get the craziest names out there, and then we'll end up going. We'll go from there. We'll just start ripping things. So, oosh. All right. So I'm starting to go down the list now. Once everything, uh, hello, stay invest. Yeah, make sure you ask. Right, fill up the chat. The more I'll get to every single one. I promise you. And don't worry about it. I'm seeing all of them. I'm just going in order. So Pew is Grab a Gun Digital Holdings. Sure. Um, there's nothing to see from a technical point of view, right? Again, I'm not one that's going to tell you that technical analysis is some sort of, magic God sent kind of thing, right? I'll be honest with you. So, first of all, anytime you see this for a long period of time, you just know this is a SPAC. You get this kind of chop and pop sideways for ages. You get this look. Has been a SPAC. It was a SPAC all back here, and then it de-SPACed for a second. Now it's back, SPAC here, and now it came up. Whatever they said here, everyone hated, and it just tanked. So if you're gonna buy these names that are awful and at lows, go right ahead. Just understand they're awful and at lows. So understand that you're buying. It's Let's put it this way. I think it's very old or very bold of you to look at a chart like this and buy it. And the reason I say that is because you're saying I am picking the bottom and it's here. This is where I think the bottom is, and I know that this is the bottom for some reason. It could be. You could be 100% right. The odds of you being right and saying here's the bottom, we're going up from here. Before then, everything was bad. At this moment, we're going up from here and everything's great. I get a little worried when I kind of start thinking like that, where you could take a trade and just lean against these lows, but you got to be really sure that whatever these things are burnt off. Now, one way, if you are buying these kind of crashes, is you can take an anchored VWAP and say, if we get back above that VWAP, at least the average market participant from this particular sell off is now up money. And maybe even you go back to here and try that as well. But they're both sitting around 10, $11. So if we get there, that's from 7 to 10, that's a pretty big move already. So there's something to be said about that. You just want to take it from 7 to 10. However, I just look at that and say, unless I am okay with just dumping it out at the lows here, which is around $6. So you're buying at 7, right? You're selling at 6. If you think that's going to work for you, go nuts. Right. Again, I'll talk about this again. I won't hammer this too much, but this is how I buy bottoms. So I've been buying this outlet stock pretty heavily for a while here, starting at 5. And the reason for it is because I've noticed these low bases that are breaking out are working very, very well. So I don't need to buy it all the way down here and just hope that the company doesn't go to zero. You wait for the base and then you push higher. So MSOS is another sector that I've been piling a little bit into, and I don't by any means think we're going way back here. Just like on outlet, I don't think we're going to 150. I think we're going to like 21, right? This zone in here. And with MSOS, I don't think we're going to $60, but could we go to 6, maybe? And just give me something that has stopped going down for a period of time. Yes, sometimes you get a V bounce. Sometimes you get a stock that goes down and hits a low and it just rips from there and it doesn't give you any chance to get in and just it goes. And there's nothing you can do about that. And in those situations, I'm just kind of bummed. I go, oh, I really wanted to buy that thing. You go outside, you kick a couple rocks, you move on with your day. What I don't want to do is I don't want to be the guy who's buying on the way down, catching that falling knife as things go. So for something like PW, if I wanted to buy this, personally, I'd be waiting for the same thing. Is just show me some area in which it stopped going down for a while and consolidates around here. Because I say it all the time that dead money to me, as you know, I don't have unlimited money as an investor. So dead money to me is almost as bad as losing money. To be honest, worse. I would rather, let's just use this for example. Right? I would rather buy something like this, like here, buy it at $7, it bounces to like 10, and then it comes back at 7 and it kicks me out, and I move on with my life and I never look back. I would rather that than own this thing here, you even own it at like say $3 and wait years for them to finally go. Because maybe I didn't lose money, maybe I do. Like what if I bought it here and it spent 3 years doing nothing and then it continued lower and went bankrupt. Then not only have I lost the money, but I have also lost all of the time that I could have been doing something else with that money, which is right investing in something that's going up. I'll put it in bonds at this point, making 5%, literally anything. So dead money just doesn't do anything. It doesn't help me in any way, shape, or form. So, give me some evidence that this thing is going to kind of base around for a while and then break, and then I would buy it. It's the way I look at it, right? Open, depending on the price, I might be in. No, not yet. So open is one that's interesting to me. If you go here, move this, put that. Oh no, there. So open is one that's interesting because I like short floats. Let's refresh this, make sure it's up to date. I like high short floats. I like where other people are in pain. I talk about this all the time. Whoops, what did it make me click on? Uh, right, it's the if you're looking at a chart like this. So this is just FinViz. I gotta buy it's like $10 a month. I gotta buy it at some point, get the ads out of here. But where these shorts are because you can look at the bottom chart here is the short float percentage. So at this point, at $1, it had about 12% of the float short. As it went from $1 to like 50 cents, that went from 10% to 25%. So people were really laying on the shorts right in this zone right here, which is awesome because we know they exist. Most of the shorts exist somewhere between $1 and 50 cents. That makes me very happy because I know not only that they're heavily short, but where. And the example I always give is AMC. AMC doesn't have a really high short float, but even if it did, they're right. Right, this company sucks and it's probably going to zero, and they're probably short from in the 60s. They don't care if AMC spikes to 10 if they're short from the 60s. You have to have both the high short float and those shorts in trouble. Those are the two things that are required in order to make a short squeeze. For open, we know there's a high short float. It was like 25%. And we know that most of them are short anywhere between $1 and 50 cents. So on this candle, when we spike to $2, we know that they're having a very bad time. Which again, I am all for. Have the worst time. So this is why this is interesting to me. Now I don't think we get the new short float data till the end of this week. So there is a chance that they've covered, but they didn't cover after this candle. Right? They didn't, right? So I think it's every 2 weeks. So it's 1, 2, and then we get 1, 2, and then we get new data. So we got new data on this candle, probably on the Monday. So this, and then when this candle closes, we'll have new short float data. So I'm interested, just in case they didn't. And the fact that it didn't go down. Those are the two things that I'm interested in. So you can take a pretty simple just trend line here and just say, there it is. You could also do what I was talking about with the Anchored View app and look at that from the highs. It's about 293. But for me, I'm looking at this on like a 30-minute chart, and I'm just saying, okay, well, right, they tried to stuff us right here. We bounced. Now we're holding. So I have an order above this 250, just this pre-market high. And, again, I'm a systems trader. I'm a systematic guy. I'm not in there punching the buttons myself to trade. I don't think that's the best use of my time, and I'm not very good at it. So why wouldn't I let a system do it? So I have a stop limit order out. So a little bit of a lesson for people. We all know about stop losses to get us out of the position. You buy a stock at 10, you put a stop loss at 9. If it hits 9, it takes you out. You can use those to get in. But I wouldn't use a stop loss order because a stop loss order works like it hits a price and it sends a market order. right? So if I used a stop loss order at 250, what I'm telling my broker is if this price hits 250, send out a market order and get me whatever price you can. This one's pretty crazy. So it might get me 275 or $3 if something's going really crazy. What I use is a stop limit order, which means that when 250 gets hit, send out a limit order. So in this case, it's going to, at 250, it will send out, I believe, a 260 limit order, which means if you hit 250, send me an order to saying I'm willing to take anything up to $2.60. At 261, I don't get filled unless it comes back down later, right? But that's what I want to see is get me in at that price. I have that order sitting out here every day. I'll take a look at it. If I still like the stock, I'll refresh it. But so far, it's been acting pretty good. Not great considering the tape and what's happening in the market, but it's been doing pretty good. So the fact that we're holding, right? If we get through there, again, I like that just because I'm kind of just betting on the fact that the shorts didn't cover. We won't know that. Again, I'm not one of those conspiracy heads. We will know that, I believe, at the end of this week. We'll know whether or not the shorts have gotten into their position. If so, then we'll get this chart updated, right? It will do another tick, and we'll see. Okay, did they get out or not? If they didn't get out, and then a Reddit board picks it up or something, we're doing fantastic. INTC Intel, the dog. So let's go back to this guy, right? I'm going to give you kind of the same speech here. This came down, and just look at the sideways, annoying, awful chop. Imagine holding it this whole time as opposed to just waiting for it to break out. Yes, you missed the move from 2 to 7. That sucks. But this is all assuming I'm right, right? And this thing doesn't drop back down, which it absolutely could. But I'm trying to take this from, I started buying it right here as it looked like it was going to break out at 5. I bought a little bit more at 7, so I'm my average is around 6. I'm trying to take it to 21. It's an amazing trade if it works out, obviously. If I'm looking at Intel, I'm going to set up the same trade. Is right now, if it starts to look like it's going to get through this 24, I'm going to buy some. And then if we break this at 27, I'm going to buy some more, right? My absolute worst case stop has to be the low of the base. But for me, if it falls too far back into the base, I'll just get out and move on. And, you're trying to say, okay, that's the recovery. But it's only been a year, right? Where we've seen with some of these, they can take multiple years. So I'm not going to touch this guy. I totally get it's at the support zone. If you want to take a shot at support, go right ahead. I do think at some point Intel is going to do something. You got to imagine that they're going to backstop this, especially with this admin. You think the CEO would just call the guy and tell him he's handsome and that they're going to build all their chips in America using America whatever and get a huge amount of money from the government. But we know what the story is here. They're behind 2.0 on the AI thing. They're doing CPUs. CPUs are so last year, and it's all about GPUs. I wouldn't imagine it's going to go under. Could, I guess, but I'm on a Mac, but most people's computers are using Intel chips. So that makes it really hard for me to imagine this thing just completely disappearing. I need to see that, right? I need to see that example. Some people, the people who want it, maybe you sell some puts down here. If it bounces, great. Maybe you just buy some stock down here. You lean against these all-time lows as you're out. All those are perfectly valid things. You're not buying like a piece of junk that could go bankrupt tomorrow. If it goes under, it's gonna take up years. Uh, they get, but the way I look at it is why not just wait? Because back to my example, right, on this guy, you stopped losing money in February 2023, and then you had to wait until June 2025 till the breakout. You always have to think, what could I do with that money in the meantime? Why not just, right, with TradingView, you just click a button, add an alert. There's your alert. You can do these with most platforms. This isn't exclusive to TradingView. You just go buy Intel. You can probably just do it with your broker, right? Buy Intel. Bam. Now it will like alert my Apple Watch or my fridge or my phone or whatever, and I just move on. So if it gets above that price, it's great. I don't think you're in any danger of, you know, a, a buyout ripping this to $50. I mean, this thing is so efficiently priced. I guess there was a risk of me on this one while I waited. I had just alert set. I put an alert above this at 560. That's why I bought some here. I put alert above here as well. There was a risk where someone goes along and says, okay, this company, I'm just going to take it out for $15 when it was at like five. I'm just going to buy it and move on. I wouldn't have made any money from that. It's one trade of hundreds that I'll take throughout the course of a year. So I don't think you're in that risk as much because a buyout would be pretty hard to do on a company this big. I think people would hear about it. So that's how I would play it. If you're not worried about that and you're just looking for it, then I think you can lean off the lows. The other thing, which I'm not smart enough to talk too much about when it comes to options, is just premium selling. Just sell puts against it is another way to take a look at that, right? Where you're just going to constantly sell puts against a position, and that's how Warren Buffett gets in. And then in the meantime, if you're waiting, then you're collecting premium as time goes on something that you wanted to buy anyway. And then if it starts to really move, then you just chase and buy it higher. Biohaven. I said high first. I like it. Is there a HVN? I know that's not the ticker, but Bio HVN. What's the ticker? BHVN. BHVN. Yeah, it's the same kind of thing, right? Stopped going down for a while. Stopped going down in May, but I would just need to see some evidence that there's a bottom in here. Plus, you got earnings estimated on Monday today. That's kind of worrisome. When they have this kind of approximately equal sign, it means they're guessing that the earnings are going to come out. That to me is something to worry about. But big downtrend, area that it's bounced before, so there's definitely something here. But I'm not. I don't see anything here from a tactical point of view that stands out to me. Oh, the old crowd weave. This is interesting. So the blue line is the anchored VWAP from its IPO. The reason that that's important is it just shows the average market participant for everybody, right? The everybody out there, what is their average price if you were kind of dollar cost averaging into this name since its IPO price, since the price that it went public at? If you were just buying in little by little, what's your average price? And that's sitting around 109.20. We're at 105. That seems like a big difference, but it's really not. I would say that's kind of a rounding error for this particular stock. So if your bet is that it's going to break from its, this you pulling back to the average, the reason I like anchored VWAP as opposed to moving averages is what moving average is important. Is the 5-day or the 21-day or the 73-day? Like how do you pick a moving average that matters? Whereas with anchored VWAPs, you're saying it's price and it's volume and averaged out for the period of time that you're looking at. So you pick the start date, the anchor point, and then you just say from that point on, this is kind of the average price. And again, that's sitting around 109 and we're at 105. So I like it. If it can get back above that anchored VWAP at 109, I would probably pull the trigger on it. I'm actually let me make a note over here now. This is what I love about doing this too. So I just make a little note there to fill out some alerts later. And yeah, the idea is that we pulled back into this anchored VWAP. If we get above it, then I can just kind of put a stop like at 99 bucks, play against that 100 area. So I'm buying it at 109. I'm stopping it at 100. I'm risking 10%. I, this thing could easily get to 140. That's not even the highs of 180 or 200. So if it gets to 140, then I'm risking 10% to make 40%. I don't have to be right very, I said I'm a quant, right? So this is the kind of stuff I like. I don't have to be right very often to make one or risk one to make four. And that's all I do is I look at it and I say, well, what's the probability that I'm right based off technicals? If the probability that I'm right is 30%, 40%, oh man, 50-50. Wow. So if it's 50-50, then that's great. And then you just make sure you make way more than you lose when you're wrong. Imagine playing roulette and, right, you bet on black every time. But when you're right, you make four times your money. And when you're wrong, you lose your money. That's a game that you would play all day long. You come into the casino with $100,000. You'd put $1,000 on the table every time. When you're right, you take 4 grand, and when you're wrong, you lose your grand. As long as you are sizing appropriately enough that a series of losers isn't going to hurt you that bad, you just play the game as often as the casino will let you until they take you out in the alley and break your legs. CMT, the CMT, looking at CMT. Some poetic about that. There's just nothing. There's just nothing here. All right, you look at this chart. You squint, you do whatever. You say, well, we're just stuck in this range. From 13 to 21, we're just kind of hard stuck in the range, and until then, there's not much we can do about it, and that's it. You're range bound. So I just again, it all comes back to the dead money thing, and the reason I'm harping on that, I think more than I normally do, is because right we're ripping here all still in the market. The 5 minute chart, yeah, we're still looking great. Like we're basing up near highs. We're gonna rip through. So you have the market at all time highs. You have so many sectors doing well and stocks breaking out and new all time highs getting hit and all that. And then you look at something like CMT and you say, well, this is just it's doing nothing. It's in the middle of the range. Do I want to put my money here? Do I think there's anything on the horizon while there's earnings that is really going to change this company? And it's in industrial machinery. Probably not, personally. GDRX. And sorry guys if I don't sound the best. I have children. And all the dads go, "Oh, I should specify I have children in daycare." So that means that you guys can probably guess what's wrong with my voice right now is the children in daycare have got me. GDRX, good RX. So this is starting to get that little, that bottoming pattern that I was talking about there with those other stocks. Is that all right? You're starting to base around. You could either mark, probably more like that, right? This $5 to this kind of 360, and then just set an alert, right? Just set an alert at let's say 512. We get above 512. That's interesting. Again, with earnings, I just have no idea, right? So the thing with me and earnings is that I will fully tell you the limitations of technical analysis. I'm not that guy. I will say surprises generally happen in the direction of the underlying trend, right? It makes sense that a stock that is going well and things that are doing well are going to continue to do well. So that makes sense to me. But there's absolutely no predictive value going into a fundamental event. I will not be the kind of technician that says that fundamentals don't matter. Of course, fundamentals matter. So why don't I focus on fundamentals? Because you can't predict them, right? You can't predict that a company is going to do way better than the street thinks, because a you need to know exactly what the street has already priced into the stock. Then you have to have some sort of insider information. So for me, it's all about looking at setups. What's the setup that I could potentially play? So when it comes to what has earnings very soon, there is just no edge for me to predict what is going to happen going into earnings. Now, when it comes to something like that machinery company that we just looked at, what is a machinery company really going to do? Right? Well, what's it going to do? Um, it's what builds a slightly better machine, gets a little bit of orders going through. Like, for example, if you guys are on my StockTwits feeds, you also know I've been posting with this F Tech for a while. I've been buying starting in kind of this area, 170, and I bought a little bit more. And now that we're basing here, I'm looking to buy a little bit more. Ultimate target is I'd like to see what happens if it gets to these prior highs, and if we go further back, I'd like to see what happens if we touch this kind of $6 area. Can we get to 10? Does it get to 30? I don't know, probably not, but does it get to 10? Maybe. And it has earnings tomorrow. I don't know. I have no idea. But this one does like it's a coal play, right? They clean the waste from coal and natural gas, and they're trying to turn it into something interesting. I'm not really worried about the stock going down a million percent, right? It's going to zero tomorrow. Probably not. Is it going to go to that $10 price target through earnings? Probably not. Now, a biotech, right? GDRX, which I guess it's internet software company, but they sell drugs. That to me is something that could move way more on earnings based off of this administration and the big beautiful bill and all that kind of stuff. So I always look at the type of stock that I have and whether or not I'm okay holding it into earnings. If, it was something crazy, biotech or internet or something that's in play in the world right now, I'd be way less interested in holding it through earnings. So this is something that's they're selling it into earnings is the only thing I can say. That might be a good thing, right? You've heard of buy the rumor, sell the news. Are they selling the rumor and they'll buy the news? Maybe, but for me as a technical play, I like it if it can ever get over this 515. Below that, I'm not really interested. So make it simple. Good afternoon, Michael. Everyone's so polite. And again, keep asking your question, guys. We got another 20. SoFi is, yeah, down, but not by much. Yeah, so I look at this and I go, okay, why aren't you participating in the rally? Right, you're a fintech, right, kind of company. If you look at XLF, that's doing pretty good today. Not as good as the market, but doing pretty good. Right, a couple of these other fintechs, right? Robinhood being the gold standard, it's up 4.5% today. Coinbase, I know is more crypto, but that's up a little bit as well. SoFi, it worries me that it's not up with the rest of the market. However, this long-term chart, I just absolutely love. You have one, two, three, now four equal highs. And yeah, you're flirting with those four equal highs and a nice big round. Like, stare at this chart for a minute. And now look at this chart. Not that chart. This chart. And tell me, at least at this moment right here, those two charts don't look pretty close. And then from there, Robinhood went from 65 to 120, so it pretty much doubled. So I really like the long term chart of SoFi, but in the short term, I worry that it hasn't been participating with today's rally in particular. It's one day of action, so I'm not going to throw away my whole idea that I kind of want to own this when it gets above 25. And as long as it can stay above that 25, I think my game plan on this one will be if we get above 25, I'm going to buy it. I'm going to stop at 20 and then hold it in case it does something crazy like Robinhood did, like double. And then I've, risked 5 points to make 20 or to make 25 points. That's a 5 times my risk. And I keep doing that just because I want to really hammer in the difference between people who look at the market statistically and kind of quantitatively, as opposed to people who just look at the I like company should go up, right? It's here is the technical setup, it looks great, I can back test stocks hitting new all-time highs and buying them, especially after a really deep drawdown. Buying a stock that hits a new all-time high, I've tested, it's a really good idea to do in the long run. And I have my risk and I have my potential reward, and it's 5 times my risk. So if there's a 20% chance I'm correct, I should do the trade over the long run. If there's a 50% chance I'm correct, it's really should do the trade over the long run. Right? You put 10 grand in, you're risking, let's say you're risking 2 grand, just to make my math easy. You're risking 2 grand to make 10. If you think there's a 50-50 chance that you can risk 2 grand to make 10, you should risk two grand to make 10, and then just repeating that over and over again, making sure that if I lose 2 grand 10 times in a row, I don't care. I can still show up the next day and do the next thing. Wendy's. Oh, what's going on with Wendy's? Is this Ozempic? I don't hate a good Wendy's. Right? Good Frosties, good fries. A little too salty on the fries, but I'll take it. Uh, it's crashing. I don't know what else to say. I feel like I should be making some Reddit jokes. Isn't that their primary? Right, when you lose all your money, you go and work at Wendy's. I guess I'm just too much of a boomer to make those jokes, maybe. But yeah, there's just nothing I can see here other than just crashing. Right, nothing in the near term. Nothing. You're going back 2016 to find these levels. It just looks like a bit of a bad company. If you're a dividend bro and you think that the bleeding is going to stop at some point, you could buy it for its dividend. It's a pretty decent little dividend there. Other than that, there's nothing makes me want to touch this. Right? They don't catch a falling knife. That is technical analysis 101. Wait for some level of support, something that is holding up, some zone that says, yes, we have at least stopped going down for a period of time. Some sort of candle, like a bullish engulfing candle or a really crazy bottoming tail or something to take a shot off. In this case, it's just we are bleeding all the way down to earnings, which is Friday. So yeah, not a shot I'm interested in. J&J. I think when you said J&J did that for years, yeah, you're just saying this just has done nothing, and this sucks. Now, at least with J&J, you're making a little bit, right? You're making a dividend or something. Like a lot of these companies, back to my example, I mean, obviously this is a speculative. Again, the reason I know about this company is because I just bought a bunch of their stuff. But it's a D-SPAC, it's a new company. They weren't doing well financially. They're not paying you a dividend. You're not making any money while you're holding this. J&J, you're getting something. It's not going to be a lot, but yeah, it's very frustrating. And again, I will debate with anyone that it is worse than losing money. Once you, depending on how much money you lost, obviously, I'm talking about small losses, then dealing with the opportunity cost. The opportunity cost being, okay, um, we have one of these things where if, say, I make 0% over 5 years, well, I don't know if you guys have been to the grocery store. The you lost money if you made 0% in 5 years. You've lost a lot of money. And then there's also there's the inflation adjusted loss. Then there's just the opportunity cost of I could have bought the S&P 500 in the last 5 years, did amazing. I could have bought bonds in the last 5 years. I could have bought gold. I could have bought Bitcoin. I could have bought any number of stocks that have been pushing and moving higher. all all kinds of stuff, right? OKLO, right? These are ones that are interesting to me. Whew, this thing's nuts. SMR? No, that's the one I own, of course. So, yeah, just be very, very careful. And there's a couple ways to deal with this issue, right? One of them, and it's something that over at Stats at Trading, so we do systems, right? These are the systems that I run. All of these systems contain something that's called a time stop. And, for you guys who are more discretionary, it's something that you should consider. And a time stop is simply saying to yourself, well, in our scenarios, hard coded that, right, we sell our stocks at this time because we've tested over the long run, a certain amount of time is the optimal hold time for our particular strategy. Now, for discretionary trades, it could be something like I am going to buy Apple because I think that in the next 3 to 6 months, they are going to come up with uh, they're getting hammered on their lack of AI. So in 3 to 6 months, the AI problem will be solved and Apple will be higher. And a time stop would simply say you go to your calendar, right? Just like I talked to you, go to your alerts, you go to your calendar and you put in a little calendar thing for 6 months from now that says unless you're making money in Apple, sell. And you do just that. Right? You could sell it wherever it is for it not moving, and then set an alert higher and say if it pushes back up to this price, I will give it another try and I will give it another couple months. Right? And then you go from there. And that is a way to avoid, if you're in something like this, if you're like, I really like, I bought this company, I don't know, somewhere here. I bought it at $5 because I really like it and I think it's going to recover. You would just set an alert in your calendar for like 2, 3 months later. You say, if you are not up money on this, if you think whatever is going to occur is going to that's going to fix the company, it's going to happen in that 3 months. If you're not up by then, sell it. Doesn't mean you have to get rid of it forever, and then set an alert to buy it back if it moves higher. Then you free up that capital, you go do other things with it. If the alert goes off, then you can move back to it. This is our power. And I talk about it all the time. I spent 10 years in the hedge fund space. And a lot of people look at hedge funds as they're like this, we are David and they're Goliath. There's these giant, monolithic entities. There's nothing we can do against them. We're better in a lot of in a lot of cases than them. Because we can do things like that. If a hedge fund wants to acquire this company, they think it's going to double or triple or whatever, it's going to take them. This thing doesn't do anything in the way of volume. It's disgusting. I've emailed the CEO. It's that bad. Um, it's going to take them months to accumulate this. They can't just buy it one day and then if they don't like it in a couple months because it hasn't gone anywhere, sell it. And then if it starts moving again, buy it back. They can't do that. We can. Right? This is our superpower. The one superpower we have over the hedge funds is we can change our minds in an instant. We can have a trade idea, and if that works out, then we can take our money and run. If it doesn't work out, we can cut our losses and leave. They just can't. They're too big. So they have to take these very long, slow bets. So have that advantage. So think about doing a time stop. I think it's interesting to little rant I had there. I do it in my systems. I think you should do it in everything else. The FMDT. This is something that our systems FDMT. This one. So our system bought some of this today on a pullback. Don't know what it is. 4D Molecular Therapeutics Inc. No idea who they are or what they do. Developing generic medicines to treat large scale diseases and blah blah. Okay, I still don't know what this company does, but the system is pretty basic. It's looking for a pullback in what's a really strong name. I will be out of this on Monday. I will 100% be out of this next Monday if I'm down money. I will 80% of the time be out of this on Monday if I'm up on Monday. That's it. Right? That's all she wrote. That's the amount of thinking that I give behind it. Why? Because I've tested this system going back 25 years and it tells me I should be out in about a week. I know that what a lot of you guys do has a lot to do with fundamentals and you like a stock for a certain reason. So you may not be able to do that kind of testing, but that's okay, right? Just this is you pick a time, right? It could be an earning cycle, it could be two earning cycles. And if it doesn't start recovering by there, then you get out. AAOI, someone's looking at here. It's pulling back to an interesting kind of a level. The only reason I think it's interesting is because it broke out from here and it's pulling back into that zone and kind of digging in here. In longer term, it's a nothing. It's done nothing. At least I don't think it's like hemorrhaging money. No, it is. All right, so that's problematic for sure. So this is I kind of think your level to look at. You have this prior high right here at 22, broke 22, came back, tested it. If it can start to grind higher, great. But I think this is kind of your line in your sand. If you end up breaking this area, the reason these areas are important is because this is where the stock is broken out of. So if when they come back to test that area, if there's no buyers there, then it could turn into a failed breakout, and then you could potentially see much lower. Earnings again coming up could negate all of this, but this is kind of the level that I want to play against here. ZVIA. See, it should be ZVAI, and then it would be great. Zevia. Oh, are these the guys? I actually like these. This is what I think it is. They make like the stevia pops. Yeah, I actually like them. I like those. I drink these from time to time. I think they do energy drinks now. I've had a couple that are okay. They're basically they just like big Diet Coke, but it's stevia instead of whatever crazy chemicals. Uh, yeah, rarely runs is right. It's done nothing for ages. The question is, are they? No, they're not making money. And again, I'm not a fundamental analyst. I won't pretend that I am, but I do know that interest rates are 5%. So the uh, the fact that interest rates are so high, you got makes these stocks more out of favor because I can take my money and in a risk-free manner, as long as America is around, I can make 5% on my money, roughly. Now, it becomes harder to buy stocks that are losing money because if you're losing money, there's only one of two things you can do. You can raise debt or you can raise equity. So raising equity means dilution, right? So dilution means, right, you get rid of you're taking your shareholders and you're taking parts of the company from them and selling them to other people. That's essentially what dilution is. That lowers the amount of uh, ownership that you have in the company. AMC is a perfect example where it's 10x. So if you own 10% of AMC during the original meme craziness in 2021, you own 1% of AMC now. That's how much you've been diluted. Or they take out more debt. Well, if interest rates are really high and they take out more debt, they're going to have to take out debt at a higher rate. And that's going to eat into any profits or any money they have even more. So the fact that they can't get profitable now means if they have to come and raise debt, it's going to be even harder to get profitable in the future. So that's why I think the stock has done pretty much nothing. It's great that it hasn't died. So that's like a win, right? That it's holding on. Um, but I'm just going to kind of look at it and say, well, you've got this area at $5 that it's hit a bunch of times and failed. If it gets above $5, maybe I'll take a shot on it there. It's a good product, right? It's just, I know personally, I like it. So, from 5, maybe you get to 10. That'd be great. But every time it's hit there, it's sold. So, what I would be looking for on this earnings report, not that I look too much at earnings reports, is does it stop losing money? Right? And what's their cash runway? I think is another way to look at it, because it's different if, so let's say they're losing a little bit of money, because you have to as a startup like this, right? You're competing against Coca-Cola, for God's sakes. But they have runway to continue to lose money at this rate for 3 years. Well, that's different than if they are losing money and they're going to have to raise pretty soon. That means they're raising off your back as an investor, one way or another. So you could say, well, I'm going to wait for them to raise money the next time and then buy it. Could be something to look at. For only 48 million shares in the float. Can we do this one? Earnings statements. Yeah, so they have $68 million in total assets. So current assets, so cash. They have $27 million in cash. All right, so that's how you do that part of it. And then for revenue, earnings, sorry. So they have $27 million in cash. So then you look at it and you say, okay, how much total do they make or lose? This is all per share. So, sorry. 0.04 times 48. So they lose about $2 million a year. That's actually not that bad, to be honest. Again, I double check that. That's just some math on the fly. But it shows that they're going to lose, I think, that's 2027. Sorry, 2025. 17. So all I'm doing is taking the earnings per share as 17. I'm timesing it by how many shares they have outstanding. And I see 8 million. So they lose 8 million a year. So they've got about 2 to 3 years of runway left. If they can turn it around in 2 to 3 years, maybe. For me, again, as a technician, I'm setting alert here at 510. I'm saying if it gets above 510, buy it. Then maybe you have this kind of inverse head and shoulders completed. And then maybe it takes a shot from 5 to 10. I'd be happy with that. I don't need to get the 65 cents to 10. Give me the 5 to 10. That meat in the middle is still 100%. So I would take that all day long. All right, guys. I appreciate everyone for coming out. I always enjoy doing these, especially I've got some good examples. I've got like 3 stocks that I'm going to look and do some research on and potentially buy. So I appreciate those. Again, the kind of takeaways, if you want to buy low stocks, try to buy ones that are basing and set some sort of time stop for your trades. I really think that helps out. And until next time, I will talk to you guys on Friday.